We are 90 minutes into the trading day. Stocks falling today. They were earlier out of the gate after President Trump announced the plans to impose sweeping tariffs on U.S. trade partners, even as the president confirms that tariffs on Mexico will be delayed for a month. So a lot at play, fast moving here, as is your portfolio. Joining me now is Katy Kaminski, AlphaSimplex Group Chief Research Strategist and Portfolio Manager. All right, Katy, amidst the he loves them not in the tariff kind of mindset here, how should investors be managing their portfolios?
I think investors really need to think about we're in an environment where volatility is going to be higher. So first, they need to think about there's going to be a lot of volatility to manage. But secondly, they need to be thinking about the implications of tariffs on growth and long-term inflation. And so I think it's really going to be a question of, is this a short-term pain versus gain where things get better, or are we in a scenario where we have sustained long-term inflation issues?
And so with that in mind, where do some of the perhaps safe havens really emerge from your kind of scan across the landscape?
Yes, so if you're definitely concerned about inflation, some of the key areas to focus on or trends that we've seen that have worked well are things like the US dollar, so currency exposure, but also energy prices and other raw commodity prices have the opportunity to hedge and offset some of these moves. Another thing which has also been interesting is that people have been, in some sense, buying long-term fixed income, but the general theme for fixed income has actually been short, because if you do actually see inflation rise, we're less likely to have rate cuts anytime soon. So I think it is tricky. It's really about hedging inflation in the short term and focusing on companies that are more resilient to some of these short-term inflation moves.
All these things considered, it comes at a week where we're going to get even more of the Mag 7 names reporting. That's been so much of the long trade that we've seen investors really flock to. What do you expect to hear from tech earnings that could set the tone, not just for the rest of this earnings season, but perhaps buoy the markets during some of the volatility that we are navigating through?
Yeah, this is a good point. I mean, as I was just saying, the larger companies that may be more resilient to some of these tariffs, if we can see strong earnings there, that will definitely give some support to the overall growth theme that we've been seeing for quite some time. So that's why those earnings are going to be an important pivot point to sort of tip the scales, whether or not this is tariffs and these type of discussions and trade war is a concern that might affect growth long term.
And so, as we're kind of thinking about the theme that has really been kind of the common denominator for some of those big tech earnings, it's been AI, it's been generative AI and how much they're investing into that. How should some of the viewers and those who have already kind of piled into this trade be thinking about the time period that they should be looking for some of those big investments on generative AI to pay off?
Oh, that's a very good question. I think if you think time frames, it can be tricky. If we start with shorter term, I mean, clearly shorter term, it's really seeing consistent earnings and a trajectory that makes sense for sort of to support the narrative that they've already sort of bought into. But longer term, as we saw last week, there's still going to be disruption and sort of a changing narrative of how AI continues to be impactful. So I think last week was a good wake-up call for many investors as well, that the narrative will continue to change and they're going to have to be sort of ready for that.
President Trump certainly uses the stock market as his barometer or as his North Star for success. Do you think that that will be something that gets factored in even amid some of the negotiations playing out on the tariff front?
Definitely the case. But what was interesting, there was recent commentary about sort of there may be short-term pain for long-term gain. So, we got to sort of ask the question of how much of this is negotiating and how much of it is sort of the time horizon they're thinking about. So I'd say, if it is the case that, sort of where we are right now is not as extreme in the long term, then sort of maybe this is all part of the negotiation tactics. So I'd have to say that it's really going to depend on what time horizon they're seeing this. So shorter term, less so maybe. So we'll see.
Katy, thanks so much for taking the time.